How do you report small business assets for college financial aid? Imagine trying to figure out how much help your family can get for college costs and realizing your small business might be part of that picture. When filling out the free application for federal student aid, or FAFSA, families need to report the current net worth of all businesses they own. This means calculating the fair market value of the business minus any debts tied directly to it. Think of it as what your business is worth today, after subtracting what you owe. This includes land, buildings, equipment, inventory, and other assets owned by the business. But it's important to note that debts secured by the business are also subtracted from the value. Starting with the 2026-2027 FAFSA, there is a special small business exclusion. This means some family-owned and family-controlled businesses can be left out of the asset calculation. To qualify, the business must be owned and controlled by family members, with more than 50% of voting rights held by family. It also needs to have 100 or fewer full-time equivalent employees. This applies to family farms and commercial fishing operations that meet these rules. If your business qualifies, its value does not need to be reported as an asset on the FAFSA. However, any income the business makes, like profits or distributions, still needs to be reported. If your business does not meet these conditions, then its net worth must be included in your asset report. Remember, your principal residence is not counted as an asset, even if part of your home is used for the business. Assets owned personally, like rental properties, are considered investment assets and should be reported. Retirement accounts, life insurance policies, and custodial accounts where the student or parent is not the owner are not reported as assets. To report your business's net worth accurately, you should gather financial statements or get a professional valuation. Understanding these rules is helpful because how your business is structured can impact your financial aid eligibility. For example, if you own your business through a limited liability company or corporation, it might affect whether you qualify for the exclusion. Managing your business assets and liabilities carefully can influence your net worth calculation. Families with private equity investments or complex holdings should review what needs to be reported and what can be excluded. Proper valuation and documentation are key to making sure your report is correct and that you get the aid you need. Working with a financial advisor or accountant familiar with FAFSA rules can help you report your small business assets correctly, optimize your aid chances, and plan your investments and business structures wisely.